Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for a eventful, volatile day, a downside volatile day, I should say, for September 1st, 2015. Tonight, let me just give you a quick market commentary. We are in the midst of unprecedented volatility, and no amount of precise, accurate technicals and all the different methodology that I use is going to come to fruition on any particular day. In simple English, on a day-by-day basis, it is almost impossible nowadays to make an accurate assessment unless we look at the bigger picture like we're going to do tonight and get a roadmap as what might be going on. Keep in mind the videocast webinar of the advanced coaching session that I put out there specifically for others to see, spelled out in great detail what the bullish and the bearish scenario is in this type of market. Now, on any particular day, when the markets open down, futures, Dow futures open down 400 points like it did this morning, it is absolutely impossible to manage what was bought yesterday. For that simple reason alone, it is mandatory almost that you have some hedges in the form of index puts, whether it be the SPX, the SPYs, the IWM, the RUT, or the QQQ, which will allow you to have some semblance of profits when your longs are getting crushed for no other reason other than the fact that it's a technical pullback for so many different reasons that we can think about. There's a lot of foreign selling. There are margin sellouts that I want to explain this very clearly. When you get a margin call, and many of you have, they give you 3 days. It's known as trade date plus 10T plus 3. If you're in good terms with them and you have a large account and such, they give you an extra grace period of 2 days. That's T plus 5. Now, if you look at the date, if you do a day count here, right there on the right-hand side, okay? Last Monday, we crashed. The last Monday was the 24th. We moved up. On 25th, we moved up, and then we gave back all in. 25th was this massive red bar right there. Okay, this was the flash crash. That was the 25th. Okay, that was the let me see it. That was the 24th. Sorry, this was the flash crash, which was the 24th, and then the 25th was this, and at around 3 p.m. we gave everything back, this red bar. So the margin calls from those days, but specifically from Tuesday, starts off on, and look at this carefully, see how it makes sense, on the 25th. Real margin calls are generated. Global institutional margin calls, sizes of 10 to 50 million, if not more. Average retail investor with large accounts, maybe $10,000, $20,000, $50,000, maybe more. So T plus 5. Trade date is 25th. 1, 2, 3, 4, 5. Why did I skip Saturday and Sunday? Very simple. Markets are closed. It's 5 business days. So today was the 5th business day. So one of the reasons with this massive volatility after setting up the market for a nice move up today and giving it all in, there's no way anything technically was negative at the close yesterday. I can show you a slew of charts and indicators which showed that. Anyway, so you have that drop today, Tuesday, okay, and there's Tuesday, okay, and then we slipped down and made a low at 3 o'clock, and then a sharp move up for the last half an hour. So is it possible that today was the 5th day and the final sells, batch sells of margin sellouts, margin calls were executed today? It is very possible. When you look at this type of scenario, like we saw last Tuesday, again at 3 o'clock, look at this. This was last Tuesday at 3. Look at the size, 766 million right there. The spike at 3 p.m. This is Tuesday. What's going on here? At 3 p.m. Coincidence, huh? Well, there's always, like they say, For the for the ignorant, coincidence is just something, easy way to explain it. And in a way, we're all ignorant about what really goes on behind the real curtains in the market, right? And not even the algos know that. They just play upon it. So the bottom line is these are capitulative spikes. So when you get a capitulative spike, you basically set up for a nice little move up. That move is zigzag, but it moves up. So let's go into this channel that I drew so you can see what might be happening over the next week to 2 weeks. All right, if not sooner. Because this was Tuesday and we reached the top of the channel by Thursday. This was Tuesday, today, 3 p.m., top of the channel by Thursday. Is it possible? Well, I think it's very possible. The fact remains that this is Labor Day weekend and we're not in the business of making people all depressed and sad and full of despair so they never open their door or open their laptop and shop on Amazon or go to Target or Best Buy. All right? So, I mean, there is an economic reason behind it. So is it possible that we flushed out all the calls today and we have a nice run towards the end of the week? It is very possible. Now, top of this channel is 20, let's do the math here. Top of the channel is 2028, right? So you do 2028, bottom of the channel here, okay, was 1904. So you got 2028 minus 1904. You have 124 points, S&P points, or E-minis, whatever, multiplied by 6 or 7 or 8 for the Dow point. That's almost 1,000 points, 990 points. Is it possible? It sure is. It was possible here. Nobody guessed it. We did it. We bought these lows on Tuesday. We played the lows here. Yes, nobody can play it like a robot because nobody knows what's going to happen in the next 5 minutes, okay? But you can play the trend. That's what I'm getting at. So let me get my drawing tool. So bottom line is we bought these lows, we sold a bunch. We held a little, then we bought these again. Nice move, okay? Sold it at the open, bought them again here into the plummet, went down a little bit, and the next day, kaboom. Pull back again. So if you follow this way things are going, now we are at the bottom of the channel. We could go up here to the downtrend line. Again, fall to the rising channel as this line, this is the extended channel. Then make a move up. Now look at the pattern symmetry between these moves here. Okay, this pattern symmetry is just the way things are. You got, once you hit the bottom of the channel like we did today, okay, and we put in some buys there after being somewhat stopped out of a few things and as well as making money on the S&P hedges, which didn't move, by the way, for most part of the day, and then they finally exploded. So it wasn't like it was a one-way street down. Market zigzagged up and down and then finally gave in and then started to move up again. Whichever the case, if this move will get towards the downtrend line here around 1966, now keep in mind these are E-mini, so you have to add like 6 or 7 points to that to arrive at the S&P point. So 1966 around 1973 on the S&Ps. It's for you to figure that out, okay? So then, then let's say you pull back a little bit. You don't necessarily need to come to the bottom of the channel. That's what it's done here, but still. And then a sharp move up with force, and all this will happen in the background of news and global flows and all kinds of stuff. Okay, so strong economic numbers, Fed governors, basically asserting that the rate hike is definitively happening, which I think the markets will like. All kinds of different things will happen in the background. That's just the way the market drama is played out. Okay, so anyway, the news is secondary. It's basically what the technicals are doing. So at this point, humans are really not involved in trading. It's the algos and the high frequency trading programs which are trading it. So then you make a move up here. So one point or another, we are getting to 2025. Sorry, that shot up a little bit. So getting all these lines out, and getting the thick crayon. Okay, let me see here. Should I get a different color? Should I get a green? Why not, right? Oval, highlight. Okay, that won't do. Trying to learn this stuff here. Highlight 1, 2. This freehand is the best. Okay, so basically what we're looking at is a lot of market structure lows, that type of stuff. People who have taken the beginner session, there's a free video on that to see. You'll see what I'm talking about. To get this up, then you're moving up like that. And now we're going to do the same thing. Hit this downtrend line, pull back a little bit, and possibly make a sharp move up towards this top of the channel. We'll see what happens after that. So all is not lost. Futures are up about 15 points right now. I showed this chart earlier on the thing. This is a live futures chart, as you can see. And let me just highlight that. Look at this. It is a 1 hour chart. I want to show you a couple of quick technicals, how I read things, just one of the things I read. So on the 1 hour basis, as you can see, it's at 90, the stochastics. So this is real time. So it's getting overbought. Overbought doesn't mean it has to crash. We stayed overbought here for a whole bunch of days, or 2 days, I should say. That seems like eternity these days. So we stayed overbought once we got here, and even on a slight move, corrective move, we actually got oversold. So it doesn't, what I'm trying to say is that you don't need to fall to the bottom of the channel in order to get oversold. You can get oversold technically, down here by simply having a small adjustment. So we stayed overbought from all the way Wednesday through Friday, right? There. It just seemed like you couldn't touch anything because everything was just running higher. And I said the hardest thing to do is to buy. And I'll tell you, this is what the markets do. They play with your emotions. 99% of trading is mental. Let's call it 90%. 10% is hard work, discipline, knowledge, charting, all that stuff. Whichever the case, we're getting overbought. Does that mean we're going to just crash and burn? No. It simply means that if the market does want to get up to this, test this downtrend line, then it's going to stay overbought like that. So minor dips are not to be feared. They're to be bought. But that has to be monitored. It's my job to let you guys know as we move along. Let's take a quick look at the Russell 2000. One of the key things, and this is hourly charts that I'm showing, and the Russell 2000 also, which I have calls on overnight. I bought them around 7. They went to about 3. I bought more at 3. They ended around 5. Not a bad deal, huh? So the point is that you always have to key factor in at least my style of way I do things, and others are so much better, but still, hey, it works for me. Is when I buy these volatile asset instruments, I never go in thinking, never do I go in thinking this is my first and last buy. In other words, this is it. This is the point of perfection, and it's going to move from there. My favorite term, there are no perfect moments. You buy in, you scale. I am seeing a consolidation channel according to my calculation. That's because I am looking at the stochastic spacing out. Here's the consolidation channel, just the way I thought. It is breaking out right now after hours. Okay, so as it breaks out after hours, I just have a few minutes here. As it breaks out after hours, we are looking to move up. We are looking to move up and hit 1160. Okay, 1160 consolidation channel. This was a nice channel move up. Here is the consolidation channel, also known as a bull flag, which I've said it from day one on my beginners coaching sessions, scares the living daylights out of people because they're like, okay, it's all over. It's nothing. It's profit taking. People buying here, why shouldn't they take some nice profits here? That's the reason it's called the consolidation channel. Simple. There are people who swung it all the way here without taking profits along the way like we did. So they sold. Anyway, now it's going to move up, and I believe that the next move is going to be towards 1160. So we got about 20 from my buy point. I have almost 35 points that I can get on this. From this buy point, it's 20 points. So I got about 30 points I think I can get on this. Okay, because my buys were all the way at the lows. So that's basically it, guys. You're seeing a lot of things in action. I am going to show you one last one if I can drag it up. And I'm almost out of time, but I want to show you something. You see how this is? I kept on showing this. See this baby here? It's beautiful. This is positive divergence starting to base stochastics. Here's a falling wedge, and in my opinion, I believe that we can, we're going to move higher. So, and higher doesn't mean higher, just around this level before we pull back again. We'll see what